Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Welcome to the show. So glad you're here today. As we talk about a very important topic, we've been asked about target date funds quite a bit. So today we talk about kind of the trouble with target date funds and also how to use them effectively. But first, a quick word from our sponsor. A credit union that offers Bitcoin? Give me 5. For a limited time only, get $5 of free Bitcoin through the Southland Credit Union app. Enrollment is quick and easy. There's no hidden fees, and you can conveniently fund Bitcoin purchases directly from a Southland account. Claim your free Bitcoin today by going to thecollegeinvestor.com/Southland. Bitcoin accounts and services provided by NYDIG. Not NCUA insured. Restrictions apply to Bitcoin bonus. See terms. And don't forget to check out thecollegeinvestor.com/Southland to sign up. All right, back to the topic today. As target date funds have become the go-to investment choice for a lot of Americans. In fact, they are now offered in over 80% of 401k plans nationwide. As a result, hundreds of billions have been invested in these funds. Why do Americans like them, you may ask? Glad you did. Because they have the premise of being simple investments that happen to be perfectly ready at the target date. However, this is not always the case. So if you don't know what you're doing, you might not be effectively using your target date fund, and that can pose bigger problems for retirement, as you can imagine. So let's talk about some of the problems with target date funds and also how to use them effectively to invest. First of all, what is a target date fund? So a target date fund is simply just a mutual fund that is designed to be the appropriate allocation of risk-reward based on the retirement date listed on the fund. A quick example would be a Target Date 2030 fund is supposedly designed to be the appropriate allocation of stocks and bonds for someone who is going to retire in 2030. This fund would most likely invest more heavily in bonds and less in stocks than, say, a Target Date 2050, where the retirement age is almost 30 years away. It's important to look at how these funds are made up. Stocks, bonds, cash, or even real estate and commodities can make up a fund. In fact, some of these funds are even funds of funds, meaning that for the stock percentage, they may invest in a stock mutual fund, and for the bond percentage, own a bond fund. It's also important to note that these funds don't offer any guarantees. Yeah, they do put a date on the fund, but that date really just is kind of meaningless. It's not the date when your money is ready. It's just simply the date that the fund chose to base its risk-reward model off of. Thus, you are still exposed to risk in these funds. Let's talk about the biggest risks of target date funds. First up, the fees. Fees, am I right? So the fees of target date funds are not usually the best. In fact, the average target date fund has an expense ratio of 0.69%. Not bad, but not great. However, these fees can really add up over long time frames, like, purchasing a target date 2050 fund, for instance. The fees can be even higher for target rate funds, or target date funds, I should say, that are funds of funds, since they also have hidden fees in the investments they own. If you're concerned about fees, look for target date funds with low expense ratios, around 0.2%, or simply create a balanced allocation yourself with the stock and bond fund, which can be had for very low fees. The next issue we have with these, false sense of safety. So given that these funds are called target date funds and they are available in 401ks nationwide, it's widely assumed that these funds are safe ways to invest for retirement. It's important, though, to remember that the date listed is only the guide the investment company uses in a calculation. It is by no means a guarantee of anything, and may not even line up with individual risk and reward structures. It also doesn't take into consideration your entire portfolio, which could include other stock or bond holdings. Basically, do your own research on what your asset allocation should be. Also, let's talk about the hidden contents. It's almost impossible to tell what is inside these funds and how the funds will perform in certain circumstances. Yeah, they do give a date, but each investment company has a different model for what a portfolio should look like based on that date. So if you invest in the fund, you should know the allocation of stocks, bonds, and cash right up front. You should also know what the fund is going to do in adverse market conditions, ride it out, or shelter in bonds. It's important to remember that bonds are trading at all-time highs right now, so even your target date funds could suffer major losses ahead. Finally, they only work while working. Target date funds are also only designed to be used when accumulating wealth for retirement. Once you reach the date, the portfolio doesn't change into one where you can withdraw from it easily. In fact, you will most likely end up having to sell the entire fund and start again. No joke. Most target date funds simply stop changing the allocation at the target date. So, if the model calls for 90% invested in bonds at the date, it will stay that way infinitely. Here's how to use target date funds effectively. With all that said on the cons, the key to using these funds effectively, and most people don't actually do this, is that you should invest 100% of your portfolio in the fund. Yes, 100%. Not 50, not 70, but 100%. And here's the reason. The target date fund is already diversified based on the date you selected. So as long as you are selecting the appropriate date for your retirement, then the fund automatically rebalances the appropriate mix of stocks and bonds for you. So let's say you only invested 50% of your portfolio in the fund and then invest 50% in other funds. You mess up your total portfolio allocation, and this could leave you overexposed or even underexposed in certain sectors, lowering your total return. Over the long run, this could even mean you miss your goals for retirement. So, if you want to use a target fund effectively, you need to have 100% invested in it. So this begs the question, can you invest in target date funds outside of a 401k? Yes, you can. Definitely invest in target date funds outside of your employer's 401k. And quickly going back to the rule we just mentioned, if you're thinking about investing in target date funds, this is exactly what you should do. Every major brokerage, Vanguard, Fidelity, etc., has a list of target date funds that they offer to their clients. And you can check out the list of the best places to invest as well. We have a link to that at thecollegeinvestor.com. So to make this work, you should select the same date you would inside your employer 401k. So for example, if you're going for 2050, you should find the 2050 fund in your brokerage. For example, Vanguard has the Vanguard Target Retirement 2050 Fund, VFIFX, and this fund would be comparable to all 2050 retirement funds potentially offered in your 401k. Some quick final thoughts and we'll wrap things up for today. So all of these risks should be carefully considered when investing in target date funds. They might be good options for people looking for simple. However, even simple can be, complicated and expensive. Just like any investment product, know it, inside and out. And you also need to remember how to use it effectively inside your portfolio as a whole. And that is our show for today. Thanks so much for stopping by, and I hope that answered some questions for you. Kind of made you think a little bit about target date fund and investing. And of course, we have a whole lot more resources, all kinds of amazing things at thecollegeinvestor.com. We're also all over social media. Just search for The College Investor wherever you are. Like us, follow us, friend us, all that stuff. We'd love to get to know you. Thanks so much for stopping by again today, and we'll talk to you again real soon.